Hey, business owners, welcome, welcome, welcome. Exciting to be here again. It's Monday, the first day of the week, and it's really thrilling to be here. And I am gonna be going live soon in a little over a minute now. Anytime now, we're gonna be going live to talk about the three reasons your business may never sell and what you can do to maximize your odds to actually sell a business. So this live is for you, business owner, who is contemplating selling their business, who have been running their business for some time now, and maybe this is that time of in your life that you are looking to exit. You're looking forward to what's next in life for you, for your family. Maybe you are trying to de-risk your assets. And as you know, for a lot of business owners, their businesses are the single largest assets they own, whether you are in property management or in accounting like me, or you are a manufacturer, a service, any other type of service provider. We all can agree that our businesses typically tend to be one single largest asset we control. A lot of our net worth is tied to our business. A lot of our wealth is tied to the business we work on or we have been building. Okay. And I understand for some of you connecting to this live, you may be coming here to see what we have to share with you to help you better prepare for your exit. Okay, so let's give it maybe another 30 seconds to a minute to let other business owners to join us before we can actually start our conversation. Okay, so if you can hear my voice, please let me know. If you can't hear me, also let me know. I'm here to serve you, to help you become a little bit better with your decision making. And I will start introducing myself soon. Let me get a little bit of water, and then we'll uh, keep going. All right, so we are back. Thank you for joining me tonight. I am thrilled to have you here. And we're going to be talking about three reasons your business may never sell. If you continue making the mistakes that most business owners keep making, and they are never able to retire, or they leave on the table a large part, a huge chunk of their wealth. Okay. And I'm gonna help you avoid the three mistake a lot of business owners make. And by avoiding these mistakes, you can actually maximize the odds of selling your business at top dollar. Okay. So let's see what we're gonna be talking about. But before that, let me make a quick introduction here. My name is Lunta Di La Paulo. I am a CPA, and I run a small accounting practice that services small businesses across the nation. Okay, we help businesses achieve essentially three major goals. Number one, we want to help our clients be more profitable. Okay. Number two, we help our clients reduce their taxable income so that we can get that tax saving to help them reinvest to diversify their portfolio. And number three, optimize their cash flow. Okay, so with that, I'm gonna jump in straight to our presentation today. So we're gonna be looking into three mistakes often business owners make that can make their business never sell. Okay, and I speak these not only as a CPA, as a business advisor, but also as a former investment banker. Okay, I have seen businesses sitting on the market for years, for months. Okay, that people sometimes come and show a little bit of interest, and then they decide to pass on the opportunity. This is not good. This is not a good fit for several reasons. Okay, and here I'm gonna share with you three primary reasons. Oftentimes, businesses sit on the market for years, and business owners cannot sell these businesses because there are certain things you need to have to actually have a valuable asset. Okay. So we're going to look first at the law of supply and demand. Just like anything in our economy, the law of supply and demand guides most of our economies. Okay. And the same thing also happens with the business acquisitions, okay, or the M&A space. Number two, we're going to talk about the competition. Oftentimes, business owners do not think about their business that is being put in the market for sale as a type of asset that is competing against other types of assets, and a reasonable, a rational investor have to decide about how and where to allocate their limited resources to maximize their return. Okay, so we're going to talk about that as well. And the last mistake we're going to cover is how the value of avoiding the illusion of timing the market. There are people, we all know them, that believe and they think that they can time when it's the right time to sell or to buy. Okay. There are some general guidance around that, but it's very, very, very difficult to predict how the market will perform and therefore plan around that. Okay. We can create some estimates about the future, our expectations of the future, but generally we don't have a crystal ball that we can look at and say, hey, look, this is how the market will be. No, nobody can actually do that. Okay. So let's dive in and see what's actually what these three important topics will be covering. Okay, so number one, under the law of supply and demand. Okay, the number one thing that I really want us to get here is the fact that we are not in control of supply and demand. Okay, currently, according to Biz Buy Sell report and other marketplace for business sell. Okay, and I'm gonna be very specific here. I am not addressing middle market, okay, that is largely serviced by investment bankers. Okay, so there is in the M&A world, there is different levels of M&A activities, different places in the marketplace that M&A activities take place. You have the main street, okay, that is businesses generally generating below $1 million in EBITDA or seller discretionary earnings, okay? That is the main street, okay? The majority of the businesses are gonna be here in this space. And then you start at the lower middle market, the lower middle market, and then the upper middle market, and then you have essentially the mega transactions that take place at the very major banks, investment bankers, places like JP Morgan of the world, okay, Bank of America, and so forth, and very large asset management and private equity firms, okay? we're not addressing these spaces. We're only covering essentially one level, okay? The main street M&A activity, where a lot of my clients find themselves, right? Generating up to 10 million in revenue, okay? And a lot of these businesses usually can make up to 1 million in revenue or a little over that, okay, in profit, excuse me, or a little over that. So really be mindful here, because they are already existing business in the marketplace, right? According to Biz by Sell, in a given year there are approximately 50,000 businesses for sale. Personally, I believe this number is a little bit lower, because my assumption is it's not factoring for businesses that are not being listed anywhere, that the seller is in contact with other brokers who are doing organic search for buyers, okay? So I would probably say the number could be between 50 to 100,000, okay, businesses for sale. But this is not only the supply side, okay? There is also a natural layer of the supply side that is going to be coming from, right? We're going to talk about this in the competition side, from the business owner that are going to retire soon. Okay. So we know today that over 30 million Americans are at retirement age or past the retirement age. And these people, about 8 to 10% of them are business owners who own financial interests in businesses. They own business assets, and they will be looking to exit their businesses. And if we can put it into perspective, okay, that's another 280 to 350,000 businesses that will be coming in the next 10 to 15 years in the market, right? So that's to say that the competition is just getting a little bit more intense for business owners who are looking to exit. And I'm going to tell you this. I am in the accounting space, and business owner or CPAs who are getting older, looking to sell their practices, unless they have remarkably good and decent CPA firms, it's getting a little bit harder for them to sell, unless they are willing to sell their business at a discount or at favorable terms to the buyer, that meets the interest of both sides. Okay, so that's to say that as a business owner that is looking to exit, right, this is not really a decision that you should think about lightly, because the marketplace is, you probably have heard of this, we are at the beginning of a massive wealth transfer, because there is a generation of baby boomers, of our parents, grandparents, who are at a phase in their lives that they are starting to divest from their interest or pass it on to the next generation. And the problem is that a lot of these folks sometimes have children who have no interest in running the business, so do not have the skill set required to continue running the business, or especially for families that do not necessarily have biological heirs, right, to take on the next stage of the business, okay? Or people who are in serious healthcare situation and they no longer um, are in a position to continue running the business. So there are so many drivers that are influencing business owners to start thinking about exit. So that's part of the reason that we are doing these lives, and we will continue doing them, to help business owners to start thinking ahead of themselves, to prepare better so that they can make better decisions, right, and not leave money on the table when the time comes to exit. Okay, so I talked about the supply side. Okay, On the supply side, we are going to continue seeing more businesses coming to the market. It's inevitable. It's not going to stop. And we will continue seeing an increased number of businesses coming to the market for sale. And that's going to create a situation where business sales price are gonna come down, because when there is an increased supply, inevitably prices go down. So if you're a business owner looking to sell in the next 3 to 5 years, you really need to make sure you start preparing your business and positioning it in a way that will command top dollar. If you are running your business just like everybody else is doing it, then you won't have much to differentiate yourself, and therefore your business might not sell where you think it should sell. So that's problem number one, right, on the supply side. Now on the demand side, there is even a bigger problem, right? Especially if your business is in the main street. Okay, in the main street, right, you need to understand the different types of buyers that exist. Okay, people were buying businesses that are generating less than $1 million in profit per year. uh, Many of them are not necessarily sophisticated buyers. They're not the type of people who have significant experience buying businesses, like private equity firms or independent sponsors of family offices or hedge funds, okay, or strategic buyers who have significant experience buying businesses and selling businesses. There are going to be individuals who are probably technicians who understand the given domain and want to move into business ownership. And there aren't many people who have the ability to take on the type of risk that comes with buying a business, okay? Because on one end, there is a need for having enough cash to pay for the business, and number two, having a risk appetite to pursue a business purchase transaction. Okay, let me give you an example. If you are let's say a daycare in Chicago, and you generate $1 million in revenue and 300K in net profit, you could be selling at 3 times. I'm just gonna throw this number there. It's probably not the right multiple, but let's say your business could be selling at 3 times your net income or your EBITDA. Okay, that's approximately 900,000, close to $1 million. Okay, so a buyer to be able to come up with that financing, right? If that's the requirement, right? It could be challenging for a lot of people, unless they go through SBA loans or they raise money through other means. And trust me, a lot of people are not very experienced around raising money, negotiating deals, because that's not what people do every day. It's not like going to a store to buy your groceries and bringing them home. Buying a business requires a different type of mentality, a different type of courage, a different type of skill sets, right? It's a complex transaction, right? It's more challenging than buying a car, buying your first home, even investing in real estate. Okay, so you really have business buyers who are essentially limited, right, in numbers, right? You have a market where supply is growing, but the type of qualified buyers, it's either constant or declining. Okay, and business buyers are going to be looking for the very good to best companies to buy. Okay, and I'm going to repeat this, the very good to best companies to buy. That means if your company, your business is not a very good, okay, to best companies in its space, it's going to be very hard for you to ever sell your business. Okay. I've seen businesses staying in the market, as I said earlier, for years, and they're not selling. Okay. Not because they aren't profitable, but because of the type of complexity involved in those kind of businesses. Okay. As a business owner that is looking to sell, you need to be mindful about what influences a buyer's decision. Okay. And right now, the buyer's bargaining power is growing, unfortunately. And my job is to help you bring that power a little bit back to you so that you can come in to the table at a position of strength and you're not handing over your valuable asset for free. Okay. So, my question again to you is, will competition be eating up your lunch? Okay. Because there is a lot of new businesses coming to the market, okay, that are going to be for sale, right? And they are limited numbers of buyers that can actually afford or have the the risk tolerance, right, to consummate an M&A transaction. Okay. Here's another thing that I want to bring up to our attention, right? It's not only buyers that it's your competition, but also every year, more and more Americans are launching their own businesses. More and more Americans are creating their own businesses, right? Across the board, according to the US Chamber of Commerce, right? Last year, in 2023, over 5.5 million new business applications were submitted nationwide, right? This is to tell you what, that people are moving into entrepreneurship, right? Are a lot of people are putting aside their 9 to 5 and they are moving to build something for themselves. What does that mean? It means the number of your of potential buyers is shrinking, right? For a lot of business, hearing these might be getting desperate, but please don't get desperate, right? I'm gonna share with you in a little bit what you can start doing today to actually improve your odds of selling your business and selling it at top dollar. Okay. So we have a problem here. Number one, we have number of businesses increasing, which is the supply side. But on the demand side, numbers of qualified buyers is declining. Okay. And we also have an extra layer of competition that is intensifying is people are launching new businesses instead of buying existing businesses. Okay. So we're seeing a few problems here that can make it very hard for you to sell your business. Okay. But here's another problem that a lot of business owners that I touched on my introduction that a lot of business owners are not thinking about, and it's very, very dangerous. Okay. It's the fact that a business that is for sale, it's a class of asset. Okay. The same way that we consider real estate a class of asset, business ownership is a type of asset as well. Okay. And when we put it into this context, what does that means? Here's what it means. It means when a buyer is looking to acquire a business, they have to weigh the risk and the return of buying the business. Do you understand? Okay. They have to wait. I'll repeat this. They have to wait the risk return ratio when considering to buy the business. So here's the question. Would a potential buyer be earning a higher return by buying your business than putting their money in a ETF, in an index fund, in another company stock, in real estate, or in other assets, right? Given the level of risk these different assets bring. The majority of small businesses, okay, if we look into their beta, their level of risk, they are usually carrying a beta above the market, okay? And when I say above the market, I'm talking about probably a beta of 2 to 3, okay? And here's why. A typical publicly traded company, right, of a very stable company of blue chip stock, it's going to be around 1.2, 1.3, okay? The beta of a volatile stock, it's going to be a little over 1.5 to 2, okay? Most small business owners do not have the type of control system, okay? They have problem with dependencies around vendors, around clients, around technology, and the worst of them is around the owner, that if the owner leaves the company, the business crashes, okay? What is that telling me? It's a highly, highly risky venture, okay? So as a business owner, you really need to understand this, that your business that you are looking to put in the market is a type of asset that is competing against a multitude of other assets available in the marketplace. So you really have the hard work of making this asset as valuable as possible and bringing down the level of risk in your firm, in your company, that will make a potential buyer comfortable enough to acquire the company. Is this making sense? Okay. So that's really what you need to be thinking about. Okay. So I don't want to spend all of my time here, but I really wanted you to get this because this is so important. It's so fundamental. Okay. It's so much more than I could actually put into words, because if you don't understand the marketplace, how things right now are getting so challenging, especially for small businesses, right? Generating less than $1 million in profit, right? It's really tough for small businesses to sell. It's very hard. It's a highly emotional task. It's challenging, it's difficult, it's exhausting. And when you don't have good advisors, it could easily become a nightmare. So do yourself a favor, please watch my previous live that we cover the steps you need to take to make your transition as smooth as possible while you command top dollar when you sell your business. But I'm gonna touch on some of the of these things in this webinar as well. So the third mistake that a lot of business owners are making, that I absolutely think, we need to bring a little bit of sanity around this, is the idea of trying to time the market. Okay. Even the Federal Reserve has a hard time, despite the technology they have, the brilliant minds they have. They can't essentially foresee what inflation is going to look like. Okay. They can't really predict what unemployment is going to look like. There are way too many things, too many factors out of our controls, right? None of us knew that the Russian-Ukrainian war would be continuing today. None of us knew that in August of 2023, Israel would go into war against the Palestinian people. Okay. None of us knew all these, right? And all these things, when they happen, they create repercussions that affects the overall market. Okay, are you following me? Good. So trying to time, okay, I'm gonna sell my business in 3 years because in 3 years the market is gonna be in a better shape, in a better place. Look, forget that. Okay, economic cycles, business cycles are not necessarily predictable. Okay, and the price of your company can be affected drastically by, you know, something that is not necessarily within your control. Excuse me. um, if you were a business owner in the restaurant space or tourism space, and you thought in 2019, hey, look, business is great. I'm going to wait until 2021 to sell my business, or I'm going to wait until 2022 to sell my business. Guess what? The pandemic came out of nowhere, right? And it just crashed the world, and it literally everything stopped, right? I had client that had to close because, you know, uh they nobody really expected this to happen, right? So timing the market is not your friend. Okay, what you need to understand instead is the impact these macro factors, geopolitical factors, could have on your ability to sell your company, and how you can prepare your business, right? Kind of fireproof it, okay? So that in the event either any of these things happen, you could still be able to market your business and still get significant value from it, okay? So we talked about the law of supply and demand in M&A activity. We talked about how the marketplace is getting skewed against business owners looking to exit because there is an increased number of business for sale and a decreased number of quality business buyers. We talked about the difficulty, okay, the challenge of that new business that are coming to the market through new entrepreneurs that are creating. Essentially, they are increasing the pool of potential businesses in the market. And we talked about the challenge around how a business sale is a type of asset that is also competing against other business, against other type of assets that are available in the marketplace, right? That investors and buyers have to consider, right? And measure them based on their level of risk. Okay, they will do that analysis to determine whether or not your business is actually a valuable asset for sale. And now we're talking about the illusion of timing the market to sell your business. So I know we're starting to get close to the end of our webinar today, but here's some things that I want to leave you with to prepare your business for sale. Okay, number one, you need to have a clear idea, okay, around the type of buyer you'd want to acquire your business. Okay, we talked about this in the previous webinar. Please, if you haven't seen this, please go there and watch the webinar. Okay, so are you gonna be looking to sell your business to a strategic, someone in similar line of business to you, or someone who is a financial buyer who's primarily motivated by the return they expect to derive from buying the business, right? What are your expectations around the timeline? Are you looking to sell immediately or in the future? Some of you might feel compelled to attempt to sell their business as soon as possible. But listen, no, don't rush the process, right? Find a professional, and based on where you are, they can advise you what's feasible, what's best, and how you can go about achieving it, okay? What's an ideal deal structure you are looking for? Okay. Are you looking all cash right at the close? Are you gonna be comfortable with earnouts? Are you gonna be looking to roll over a piece of equity? Are you gonna be willing to provide a seller note, seller financing, a mix of the above? Are you looking to sell the stock of the company or the assets of the company, right? Are you are you comfortable breaking up the company and only selling, you know, what do you consider, the most valuable assets and keeping others? What are your expectation about it? Okay, so having clarity helps us make better decision. Okay, and then you need to start organizing your business for sale, right? Compiling your financial reports, your tax returns, your HR documentation, your operating data, your KPIs, your revenue and client file, contracts, agreements. Uh, the fundamental truth here is documentation. If you've done a poor job around documentation in your business, it's going to be very, very problematic for you, right? When a potential buyer shows up at the door and start asking document, and if it's taking you 1, 2, 3 weeks to respond, um, to a due diligence request, guess what? That's going to be raising a lot of eyebrows. It's going to be raising a lot of questions. It's going to make your business a little less valuable than you thought because, you don't even have a clean balance sheet, right? You are commingling your business assets to your personal assets. So, do yourself a favor. Start organizing your business. Okay. Start segregating your personal assets, your personal finances from your business finances. Okay. Try to understand the tax implications of the sale, right? In the US, as the famous saying goes, there are only two certainties in life: taxes and death, right? If you sell the business, there's going to be some tax consequences. Do you want them to be favorable to you or unfavorable? The answer is in the preparation. If you prepare, you can make a business sale a very tax efficient process for you. But if you don't, it may not be that way. Okay. And we are here almost 40 minutes to our life, to our life, excuse me. The next thing you can do to prepare for sale is to figure out who are gonna be part of your deal team. Are you gonna need attorneys? Are you gonna need accountant? And bet you're gonna need these folks. Okay. Are you gonna need an M&A advisor, an investment banker, business broker to assist you in preparing the business and bringing it to the market, right? And here's some of the really important thing you need to address before even you start telling people you're selling your business, right? Are there any major issues that could derail the transaction, right? Are there accounting issues you need to address? Are there unpaid taxes issues, especially payroll issues that you need to address? Are there any outstanding lawsuits, any employment challenges? Do you have a high turnover of employees that you need to get in under control before you take the company to the market? Okay. Is your client base unhealthy or unstable? Do you have a high client concentration? Maybe two or three of your top clients contribute, 50% of your revenue. That's a big problem. That's a big problem. Okay. Business buyers don't want to carry more risk than necessary. So you need to be addressing these items, right? If you're looking to sell in the next 3 to 5 years, you absolutely need to clean up a little bit the house, getting things organized, right? Back to my list of questions. Do you have a system of internal controls? Do you have clear reporting lines? Does your business have appropriate systems, processes, and procedures? Okay. Do you know how you create value for your clients? How do you manage value for your clients? Okay. Do you have any major dependencies in a single relationship, in a single client, in a single resource, in a single individual, in a single employee? Okay. What are we trying to do? Reduce the level of risk in the company so that at the eyes of the buyer, they become valuable asset to acquire, right? Do you see what we're trying to do? Yeah, great. So once you have all these things clear, you have clear expectation, you have clear timeline, clear valuation expectation. Okay. You have set up your life priorities after the sale, right? You have started organizing your due diligence list um, for when a potential business buyer shows up, right? All these are gonna make your business a lot more valuable and easier to sell in the market. Okay. And here's my final piece of advice. Please do not go cheap here. Okay. Don't try to find a lawyer in throughout this process that have never done a deal before. Okay. Because this is complex. This is not, I'm gonna tell you a funny story. Uh, I know someone, I'm gonna name here the person or their business, but when they were looking to buy their business, they went so cheap to the extent that they used one of these online portals to download the purchase and sales agreement, and they paid, I think, 100 or 200 bucks. Uh, and they signed that. They gave it to the seller, and I I also think the seller didn't have a good attorney, and that's how they bought the business. Please don't do that. Okay. Interview various lawyers, talk to them, see who you like, see their experience, okay, especially with the type of business you're looking to sell, okay, so that they can represent you. Okay, the same applies for accountants, for business brokers or investment bankers. Okay, don't go cheap, because cheap could cost you a lot more than you're trying to save right now. Okay, I understand this is one of the largest transaction you can potentially have in your lifetime, and it's very important for you. And for some of you, it could be the last big transaction in your career. Okay, it can be the transaction that prepares your retirement. So don't make mistakes here. Don't try to work with people who have nothing to do with your field. Okay, if you want to hire an attorney, don't go hire an attorney that only does business contracts to draft to advise you in negotiation during the transaction, or to prepare your firm for sale. Okay, so don't do that. Find professionals in the space where you need the relevant expertise. Okay. I'm gonna stop here, and here's my information if you want to reach out to me, to my firm, my team. As I said at the introduction, I run a CPA firm based in Chicago. We also have an ebook we can share with you. Please reach out to us, to my team. We are more than happy to connect with you, to assist you, to support you in any ways necessary. It's been great spending these 45 minutes with you, and I look forward to your questions, your comments. Set up a call with me, with my team. More than happy to continue supporting you. I hope you have a wonderful rest of your day, and I look forward to connecting with you soon.